Hello, and welcome to this installment of our virtual conference series with a focus on freight transportation and logistics. I'm Greg Pendy, a member of the SPAC and Disruptive Technology Equity Research team at Chardan Capital Markets. As always, I'll start on an interesting note with some important disclosures. During this call, we will not be discussing Chardan research. Any discussions about research should be coordinated between a participant and their respective salesperson. Our compliance team has asked me to read the statement for this investor call. By participating in this call, our speakers attest that they have made Chardan aware of any potential conflicts and they will not discuss any material, non-public, confidential information that they are aware of that may breach their legal, regulatory, or fiduciary responsibility to any parties. So with the disclosures out of the way, it's my pleasure to introduce Matt Booth, the president and CEO of Urgently. Matt, thank you for joining us.
Thanks for having me, Greg. Look forward to the discussion.
Yeah, so let's get into it, and let's just start, I guess, with some big picture questions, and then delve into some more recent events and pressing company specific questions. But from a big picture perspective, Urgently offers an alternative to the traditional experience through a digitally native software platform to match supply and demand in a network for mobility assistance. So can you just walk us through how this is disrupting the traditional platforms out there, and what are the key advantages that you provide for accelerating adoption of your platform?
Yeah, it's a good question to start off with, Greg. So I'd start by saying this simply that today new vehicles are basically iPhones on wheels, so they're computers driving around sending out signals, which need to be interpreted. And in order to interpret them and do something with them quickly, you basically have to solve an algorithmic search challenge at scale. So you need to deliver results back in 100 milliseconds or less. This means that you really need to have a technology first, data first, network and scaling first business to interpret those signals and then do something with them that's the best for the customer. So unlike some of the competitors that I'm sure we'll talk about as we go through this, that had started 30, 40, 50 years ago or 100 years ago when there were no computers and no cell phones and no GPS, everything in this company is built on proprietary software. So it allows us to scale and do things that you couldn't do if you weren't a technology first business. So we spend a lot of time and money and effort around data science and algorithms and using these algorithms to figure out how we price in real time, how we match supply and demand, how we use day part targeting to change the offer that we're giving to the network. And, a lot of things like that we kind of go through and make sure that the customer has an exceptional experience on the other end that would be very difficult, if not impossible, without, computers.
Right, that's helpful. And then just as you look at the global landscape, what do you identify as some of the global mega trends that will shape your industry over the next few years? And just briefly, further expanding on that, how have you positioned Urgently to prosper in that type of environment?
Yeah, so I mentioned that, earlier that that cars are basically iPhones on wheels these days. So you can imagine like what's coming. I think Tesla had an announcement they're going to come out in 8.8 with some kind of new fleet, TBD, around autonomous vehicles. Like we really believe autonomous vehicles, EVs, and hybrid adoption, like these things are going to change the landscape of mobility pretty substantially in the future. Is it going to be this year or next year? Like, who knows? But once these autonomous vehicles start to hit the road and EVs start to expand, it's going to really change how people interact with their personal vehicles quite a bit. So I think we're at the early innings of this, but over time, you can imagine, if an EV vehicle breaks down, you're going to need someone to go out there and something as silly as the customer when they got out of the car didn't shut the door. Like these are all things that are going to have to be figured out over time, and you're going to need a platform like ours to digest these signals and figure out what needs to get done and in what time frame. So it's pretty exciting. I think a lot of the things that are coming, a lot of it's kind of like, the World's Fair from 50 years ago. These things are finally starting to come, and it's going to be pretty interesting to see kind of what happens. So like we're really focused on the Urgently side, like how do we have a superior customer experience? Because we believe that if we do a great job for the customers in the end, that we'll win more customers and the business will grow over time. And it's not going to change how we operate, whether it's an autonomous vehicle or a fleet or any of those other kind of things that are starting to roll out.
Great, that's helpful. And then I guess with all this disruption and change going on, how would you describe the competitive landscape right now um, that you see out there?
Yeah, I think that it's this time right now with interest rates going up, and investment dollars becoming more and more scarce for companies, there the competitive landscape has started to narrow pretty substantially. So there used to be a handful of companies out there that were thinking about, we're trying to do something akin to what we were doing, and others, many of them, haven't made it through. Really good opportunity. It's kind of, I should say that the competitive landscape has narrowed to two large competitors, really. Um, and one is focused on subscription and one's focused on large insurance at scale. And there really is an opportunity because of the interest rate environment and the investment environment to start to roll up smaller players and adjacent businesses to build something, at scale. So we can achieve scale much faster just because, same thing that you guys probably look at with other companies. There's still a lot of great companies out there that don't quite have product market fit or scale. They're going to need to be, attached to, a larger company like Urgently to start to scale up their business. So we're pretty excited as we get through this year and get to break even by the end of Q2 and refinance some of our debt that, we can go out and start to look at some of these opportunities to do bolt-on acquisitions to grow the business.
And then outside of more challenging financing, is there just anything else that you think are near-term obstacles for the space in general?
Yeah, I think I think there's quite a few. Some of the macro trends in the world these days are, fairly worrisome. Um, Things going on in the Middle East and things going on in Ukraine, they're going to start to push gas prices higher. I don't think we've seen the top of that yet. These kind of things all have an issue, a ripple effect downstream on the supply chain. You'd expect EVs adoption to be going faster. It seems like it's slowed a little bit. So it's both an opportunity, but it also requires substantial capital investment. So I think, the combination of moving in an environment where we're going to start to see where interest rates are not going to drop as everyone expected, and we're going to start to see rising gas prices. And you couple that with the really interesting business model innovations that are coming with some of the things that I mentioned earlier around AVs and fleets and those kind of things are going to be built on subscription services. And those require business model and sales channel investment, from folks that are going to need to also focus on building EVs. So, that plus software at scale is a new skill for many companies. They'll get it right over time, but it's going to take a little while. So I think the combination of the macro events and then also some of these near-term, obstacles on the automotive side are just going to start to slow things up a little bit. But we'll come out of this in a year or two, and I think it'll be a very interesting environment for us.
Great. Well, I think that's a good segue to now kind of drill down deeper into Urgently and your platform. So just as investors kind of look at your network overview, I guess, can we start off with the demand side, then we'll get into the supply and mode. So just starting off with the demand, the customer partners, including the OEMs. Can you just kind of give us an overview and the objective?
Yeah, of course. Of course. So there's a couple of different constituents in the network, and our goal is to provide, exceptional service and transparency to all of them. And let me go through the the entirety of the landscape, and then if you have any follow-up questions, feel free to ask me. So on the demand side, if you buy a new car and it's under warranty for 2, 3, 4 years, it comes with a whole bunch of in warranty services, one of which is roadside assistance. So if your car breaks down and you hit the button or you call on the phone or you go through the app, um, companies like Urgently provide a white labeled experience for OEM, fleet, and insurance partners. So when that signal comes across, it's our job to match that with the supply side. On the supply side, we have a platform that hooks into large fleets. They're all independent contractors and roadside assistance providers, such as tow trucks and mobile repair, tire repair, and battery replacement. We send out a signal in real time that matches the right supply with the demand. So is it the right vehicle? Are they close? And how have they performed historically on a list of customer service scores? And the goal with all these assistance partners is to drive, more related job opportunities back to the ecosystem. And then the competitive mode around this is this real-time data collection and then the ability to add services to gain tractions by adding, more data and more insights for OEMs. And that includes at the OEM level, and it also includes at the dealer level. So we have software on the dealers that allows the dealer to watch the customer transaction and experience in real time. So as soon as the connection is made, the OEM can see everything in real time. The customer can see everything in real time. The dealer gets a notification that there's someone coming in to see them. And then, of course, the driver of the vehicle, or the service provider knows exactly where the vehicle is. And just much like Uber, you can actually see people coming on a map so everyone knows where everyone is and what the expectation around the job is. And we go back and we score all these in real time. We have 4.6 out of 5 million jobs that we've done in our history, an average of 4.6 out of 5 stars. So we're super happy with the quality. We can always do better, but it's amazing that out of 5 million jobs, you don't wake up in the morning and decide you want to break down. So you're not having a great day already, but the fact that we can get people to a 4.6 out of 5 stars is something we're super proud of.
Great, that's helpful. And can you help us understand the target market? I know in one of your OEM wins, it cited your expertise in EV, but just help us understand kind of where you think that sweet spot demand would be.
Yeah, so we're focused primarily on the OEM side of the market. We do have some insurance partners and fleet partners. About 30% of the business is fleet, and about 65, 70% are OEMs. We're focused on that side of the market. As a starting point, we start to expand. We will expand over time, but it's really because new cars have the most sophisticated computers in them, and they're sending out the most signals. And then fleets obviously are at the front end of that, and they do the most with digesting those signals to figure out how to how to improve the experience. But urgently, over time, has continued to move up on the competitive landscape by adding larger and larger clients. So we did send a press release out. We're hoping to send a combined press release out, the next month or so with our partner that we just signed and we just launched. And the way to think about it is, premium luxury OEM that we work with, they might sell, 325,000, 375,000 cars in a year. But these large, top 3, top 5 global automakers, they sell 6.5 million a year. So just the opportunity set for us has grown pretty substantially as we've broken through kind of that last ceiling of where the demand is. Like we're finally at a point where we've proven that we can take on these large accounts and we can deliver quality at scale. And now that we've gotten one, we believe over time we should expect to get others as well, because it was really something we were, locked out of, probably a poor phrase, but the way to think about it is like until you get a certain scale, it's very difficult for these large companies to take you seriously. And we've proven we can do that, and we've been delivering since launch. So we're pretty excited about it.
Great. That's helpful. And then just from a competitors, and I know some of them might be the legacy competitors who have been around for a couple of decades, but can you just describe who you see as the main competitors and what their scale is right now?
Yeah. So I think like we have about 15% of the B2B market or so, and the B2B market, would be like I mentioned, say like a BMW or someone like that wants white label service for their customers. So it's all the OEMs. There's the largest subscription business, automotive business in the world is of course AAA, 60 million members that pay between $50 and $100 a year. Started in 1902. It's an amalgamation of 32 different clubs. They're a fierce competitor on the subscription side. We don't play so much in that space, but we do look at it like many other companies and say, you know what? Eventually, as EVs and autonomous vehicles and others start to expand in the landscape, there's an opportunity to provide a new subscription service. So we do look at that from time to time, and we do compete with them somewhat on the OEM side of the business. And then on the other side, there's a large B2B player that is mostly focused on the insurance side of the segment. So the really large insurance accounts started in 1972. It's a family business, really pretty tight operationally. Like you gotta give these guys credit where credit is due. They built a scaled business. And as I said, we're 15%. We've taken accounts from, almost everyone out there. And we take the competitive landscape pretty seriously, but in the end, we think more about how do we deliver and build new technology, and how do we innovate, and how do we build an exceptional experience. And that's gotten us to where we are in terms of revenue. We believe it'll take us to the next part too, which is starting to knock down some of these really large accounts and working with them. So
Right. And just, any key partners or strategic investors that
yeah. So we've been really fortunate over the years. We have some incredible investors and patient investors on both the operating side and the investment side. So, if you read our financials, we've disclosed that, Porsche, Jaguar Land Rover in Motion, BMW Ventures, Enterprise, American Tire Distributors are all strategic investors in the company. They're still strategic investors in the company. Many of those are actually operating partners as well. Some we hope soon will be, at least one soon will be uh, an operating partner. But it's great. Like they're long term. They believe in the vision. They believe we should cooperate. They believe we can build something exceptional for their customers, and that's the reason they've been so supportive. And like it's really nice to have kind of a front row seat to the things that they're thinking about and how we can collaborate together more to build a good experience for their customers. Because this really is one of the largest touch points for a customer after they leave the dealer. So it's pretty critical that you have a great experience.
right. And then can you just talk about the long term, just big picture revenue pathway, how, the overall growth algorithm that you see over the next, 5+ years?
Yeah, sure. So we just finished a large acquisition. We acquired a company called Autonomo. The merger was completed on October 19th last year. So we're still kind of digesting that a bit. We've told folks previously, and we reiterate this whenever we can, that we will be break even on a non-GAAP operating basis, so not including stock options and merger related expenses and things like that by the end of Q2. So again, non-GAAP operating break even by the end of Q2. We have also told folks that we are going to refinance our debts. We have some debt due in January. We've paid some down already, but that's a big kind of focus of ours through those two pieces. And then the longer term, after we finish this, that we'll continue to grow at 25 to 30% after we can finish consolidation and digesting the acquisition. So, we do think there's a lot of really good growth opportunity, especially with, some other companies on the strategic M&A side. So there's a lot of really good ways to grow, not only organic, but inorganic.
Great. And then I guess on that, you did one acquisition and you've mentioned it's a tight financing environment for some of the smaller players, but what are the attributes that you look for ideally if you were to in your past acquisitions and how you think about them? And also, is there any licensing opportunities to think about?
Yeah, so I think on the international side, there's some really interesting licensing on SaaS opportunities that we continue to evaluate. I think like we like the SaaS business, we like the licensing business. There's some really good geographies that we wouldn't operate in ourselves that we will look at from time to time where you need a local partner, like especially places in the Pacific Rim, I think would be great places for software licensing. And then like really, like I guess we said earlier, like this environment that we're in, it's like 2000 all over again. There's like interest rates are going up. A lot of excessive investment has gone into companies that, maybe just didn't quite get there or are not going to quite get there. So there's really good companies that aren't going to make it through due to the interest rate environment, due to the funding environment. So they're going to need homes. The things that we're going to look at are going to be, companies that are profitable, companies that'll be accretive on an EBITDA basis to us, that are strategic and core to kind of what we're doing. There's some opportunity to roll up some folks that are similar to what we do. And then there's some opportunities to add adjacent, subscription and other SaaS revenue and accretive margin to the business. But it's going to have to be something that's, accretive from an EBITDA standpoint and profitable. We're not going to go out and acquire companies that are, losing tons of money. I think those days are gone, I think, for the foreseeable future.
Great. Well, I think that brings us to an end. I want to thank you, Matt, for sharing the story with Urgently with us today.
Well, thanks for having me, Greg. It's always great to chat. Look forward to continuing the dialogue and hope your virtual conference goes well. Thanks for having us.
Yes. Thanks.